Ladies and gentlemen, good day and welcome to the Q2 FY23-24 earnings conference call of the Karur Vysya Bank. We have with us today the management team of KVB, represented by Mr. Ramesh Babu, MD and CEO, Mr. Natarajan, President and Chief Operating Officer, Mr. Ramashankar, CFO, and Mr. Dolphy Jose, Group Head, Consumer Banking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. B. Ramesh Babu, MD and CEO, to take us through the highlights of the quarter gone by, after which we will open the floor for questions. Over to you, sir.
Thank you very much. Good evening to all and welcome to the Karur Vysya Bank's earnings call to discuss the results of Quarter 2 of financial year 2024. I am pleased to mention that our bank continues to demonstrate its consistent performance in the second quarter of the year in terms of growth, profitability and asset quality. I am very happy to say that the bank had crossed historical milestone of total business of 1.5 trillion, that is 1,50,000 crores. You would appreciate that we had crossed 1,25,000 crores in March 22, and the next 25,000 crore has been crossed within a short span of 18 months. You will be glad to note that our performance in terms of credit growth, margin, ROA and delinquency is in line with our guidance. I am sure you will not differ if I say that the outcome is on account of our continued focus on various initiatives we were implementing over the last few quarters. All of you would have gone through our detailed presentation on our Quarter 2 numbers. I would like to share some of my thoughts on the performance of the bank during the quarter and our guidance for Quarter 3. We were able to sustain the growth momentum during the second quarter as our total business grew by 4% and reached a level of 1,53,516 crore. We have been guiding in our earlier calls about our focus on inclusive growth from all verticals with respect to advances. I am pleased to share that during the current quarter, we continue to maintain this, while commercial and corporate clocking 6% quarter-on-quarter each. Agriculture and retail segments have grown by 4% each. Our continued focus on MSME in metro, urban and semi-urban locations supported the growth under commercial segment. Corporate book, which had muted growth in last quarter, improved during this quarter on account of higher disbursements. Retail growth is similar to last quarter, and the majority of the growth has come from mortgages, both residential and non-residential. Our focused effort on the distribution and benchmarking of our products to market-supported operating team to garner more business under these segments. The overall growth is a touch above on our annual guided growth of 14%, and we expect that the trend will continue. Our deposit growth was at 3% during the quarter, and the term deposits and CASA deposits were grown by 4% and 1% respectively. We had highlighted about our liabilities acquisition team. Out of the planned resources of 1,300, we continue to build our retail acquisition team by onboarding 367 resources during the second quarter, aggregating to 1,272 resources. Seamless integration with the original structure is being pursued so as to achieve the synergies of the branch and sales channel for augmenting larger business growth. Our YTD growth during the year so far is at 13%, and we plan to maintain the growth trend in tune with our credit expansion. We had indicated in the last two calls about expected compression in NIMs in the first half year and would be in the range of 4%. Net interest margin reduced by 12 basis points on sequential basis during the quarter and is now at 4.07%. For first half year, we are able to maintain NIM at 4.13%. In spite of the NIM compression, our net interest income has grown by 2% during the quarter and 16% year on year thanks to our consistent efforts in bringing the desired assets growth. While cost of deposits has gone up by 20 basis points, yield on advances increased by 7 basis points during the quarter, resulting in a compression of 12 basis points. Based on our historical pattern of renewal of deposits and fresh deposit acquisition, we expect that there will be a further increase in the cost of deposits to the extent of 20 basis points in third quarter, assuming no change in our deposit rates. Yield on investments has gone up by 13 basis points during the quarter, and it is estimated to go up by 10 basis points in the next quarter. We have increased our MCLR by 25 basis points during the quarter and initiated many efforts in maximizing returns from the credit book, and we expect 10 to 15 basis points increase in the yield on advances maybe in the next 2 quarters. Considering all these factors and without taking into any policy rate changes, we expect that NIM will stabilize at 3.8% at the exit quarter of the current year. We have achieved ROA of 1.57% in this quarter. In spite of reduced margin, our business growth, fee income, lower credit cost and recoveries in written-off accounts continue to support us to keep the ROA above 1.5% levels. Our slippages continue to be under control, and our gross slippages for the quarter is less than 1%, which is as per our guidance. We continue to have negative net slippages taking into account recovery from the written-off accounts this quarter also. Our SMA 30 plus of the entire loan book at the end of the quarter continues to be at less than 1%. We are confident that we will continue to keep the ratio below 1% as guided in our earlier calls. Our efforts on recovery of technically written off accounts are continuing to yield results as we have recovered a sum of 86 crores during the quarter. Total recoveries till first half of the year are 144 crores. Due to lower slippages, recoveries and write-off, our gross NPA has come down to 1.73%, and we expect that we will continue to maintain at below 2% levels. For the quarter under review, we have provided a sum of 102 crores towards NPA migrations, standard assets and prudential provisions. We estimate that credit costs for the current year would be in the range of 75 basis points as guided. As done in last quarter, we have provided a sum of 25 crores more towards floating provision to meet any contingency, including ECL, and provision available now under this head is 50 crore. Our net NPA has come down to 0.47%, and we would continue to maintain net NPA at less than 1% of our loan book. Our standard restructure book is further reduced to 1.2% of our loan book, and we hold a provision of 25% of the standard restructure book. Our cost to income ratio is at 49.14% for the current quarter, which is sequentially higher over previous quarter. This is mainly due to additional provision made towards superannuation benefits on account of wage revision of employees. Bank has been providing 15% of our eligible wage bill from November 22 onwards on the estimated wage bill increase. Now, it is estimated a sum of 100 crores is required towards superannuation benefits on account of wage revision, and we have provided a sum of 33 crores during the current quarter, and the balance amount will be provided in the next 2 quarters. So far, we have provided 117 crores. So if you see that including the current quarter additional provision, the additional cost is a one-time expense, and our normalized staff cost would be in the range of 290 to 300 crores per quarter. As indicated earlier, our cost to income ratio would be in the range of 45 to 50, and this is our endeavor. Our CRAR continues to be robust and is at 16.84%, providing us comfortable headroom for growth. Our liquidity is well managed and the CD ratio is around 84%. During the quarter, we opened 16 branches predominantly in semi-urban, and total branches opened during the first half of the year is 25 branches, and opened one digital banking unit at Chennai. Our new initiatives of KVB Smart under the commercial banking business is progressing with a portfolio of 49 crore. It added Madurai Center during the quarter, in addition to Coimbatore, Chennai, Hyderabad locations with a team size of 48 numbers. It is in a formative stage. It will take some time for delivering what we thought. Business under NEO, co-lending business and transaction banking and precious metals continue to perform well. Other business performance highlights are given in our presentation. We have been consistently improving our performance over a period of last 2 years, and the trend is continued in the half year also. I would like to conclude with a quote of Napoleon Hill: strength and growth come only through continuous effort and struggle. Our effort would be to focus on sustaining our growth momentum to ensure that our ROA is above 1.5% levels going forward. I am grateful to all our investors, analysts, and stakeholders for the confidence and continued support, which we will reciprocate through our better performance in the days to come. Now, I'll be glad to respond to your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1 on your touchtone telephone. Participants who wish to ask questions, please press star and 1. The first question is from the line of Rakesh Kumar from B&K Securities. Please go ahead.
Hi, sir. Thank you, sir. So just one question. Firstly, on this cost of term deposit. So how much increase would have happened, sir, in this quarter on a sequential basis? Cost of term deposit, sir?
Cost of term deposits.
Yes, sir.
The cost of overall deposit, term deposits, I think is CFO.
Same, sir, because you don't have any comments, you don't have any things. So it will be same.
Same cost.
Yeah. So
during the quarter, the term deposit sales, the same trend is being maintained and no additional cost has gone up because the rates of interest we have not changed. The same rates are being continued.
And cost of deposit, sir, how much increase was there, sir? Cost of deposit, and how much it is expected in the Q3 and Q4, sir?
Like Q3, we have conveyed in the original this thing, around 20 basis point we can expect that way. And cost, if you can look at this, 5.16 is the cost of deposit now. June.
Okay. So, and the similar kind of increase or would be there in Q4, sir? Q4?
Q4 we will not be able to tell at this stage because the flows, what we look at it, because how it unfolds, we'll have to see. Suppose if the liquidity becomes an issue and other banks are increasing the rates and all, we may have to do it. Otherwise, we will be continuing the more or less the same rates and the same trend will continue. So that's why what we thought is once the third quarter results are there, we'll have a better clarity about the fourth quarter. At that time, we'll give you an indication.
Okay. Okay.
So that way, if you look at it, our cost of deposit for the June is 4.96. Now it is 5.16, 20 basis points. It has gone up there.
Correct. Correct. Okay.
Okay.
Okay. Sure, sir. Sure. Thank you. Thank you.
Thank you.
Thank you. The next question is from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah, hi, good evening, and congratulations, sir, on a great set of numbers.
Thank you, Jay. Thank you.
So first on credit growth, right? So as you mentioned in your opening remarks, we have done much better than the guidance that we had given at the beginning of the year. of 14%. Any thoughts on, sir, revising that guidance at all?
No, Jay, in fact, it's a bigger question. Why, I'll tell you. So, because this quarter, if you look at it, CIG has contributed where the growth was muted relatively last quarter. But if otherwise also, if you look at it, RAM sector, each one of them, they have grown very well. So what we feel is still we want to maintain this 14, 15, what we are saying. The reason is simple. Now, the deposit cost, what all is coming up. So suppose if this continuous majority is coming up in time deposits, it may not be worthwhile to take the lower yielding many of the assets. So in the process, we may, in fact, during this quarter also, we are planning to come out of few of the low yielding assets, at least so that the margins can be protected. So instead of taking the deposit at that rate and all, and with a thin margin of 0.5% and 1% working on that, instead of that low yielding top line, it will come down, and we will increase this sort of a yield. If I am replacing an account with an 8.25 to 9.25 or 9.85, I will be straight getting on the same amount with 1.5%. So that way, at this stage, rather than focusing on the top line, we are trying to focus on the bottom line. When the deposits normalcy restores and all these sort of a fight comes down, then we can think of the top line also aggressively how we can grow.
Right. Okay. And sir, similarly, you also mentioned that, under the deposits have been continued. I mean, the deposit growth has mainly come on term deposit side. At the same time, we were running this initiative on CASA.
Correct.
Right? So if there is any update, I think maybe the growth YOY and QOQ for CASA is very low single digit, 1-3% only. Is there any, how are you assessing the CASA growth initiative?
Yeah, absolutely. Our Dolphy Jose, who is the head consumer banking, is on the call. Dolphy, so please take this question and all. Go ahead. Dolphy, are you there?
Get the question because I got disconnected in between. Can somebody?
No, the CASA initiative, what we have taken, how is it going forward and what are the expectations and guidance? That's what Mr. Jay Mundra is asking. You can respond on that.
Yeah. So, our 13% is what our CASA growth is, our overall deposit growth is. And our overall deposit, where the maximum growth has come from the TD and RTD deposit mobilization. CASA has been comparatively slower. But for ensuring that going forward that we are ripped up to do the incremental top line on CASA and continue to garner the low-cost deposit is in track. As I mentioned last time, that we were also MD sir just mentioned about recruiting around close to 1,227 people already on board, which are a pure sales team with the acquisition of CASA primarily. And also to augment that, we also have a team which is the frontline branch team called the branch sales and service executives, which is again a lateral recruitment of about close to 1,000 odd people who are trained for engaging with customers for further deepening and improving the PPC of product per customer. So these are the two large activities which we are doing, and it's in place. And I'm expecting good traction, and we should be able to continue the chase of CASA as per the guidance of the bank.
Yeah, Jay, in fact, I would like to add a few more points for what Dolphy has mentioned. Dolphy, I think you have to mute that echo is coming. Yeah, so I would like to add, Jay, are you there?
Yes, sir.
Yeah. Few things I just want to add in addition to what I have mentioned. Now you see, when these 1,300 people have come, they have come from different banks. So the technology what they were using and the products what they were using were altogether different. Initially, there was a lot of brainstorming is there, and what is good for the bank, because the bank has their own products and all. Earlier, we were pushing the product. Now the question is, when these boys have come, they are demanding, saying that this is what market wants. We need to modify our product on these lines. Then only the product will be through. Likewise, the technological intervention, what all are required also, they have been demanding that is good for the bank. So that way these things are in the process changes, technology changes and product changes. So in the process, all these people, they are on the job into the market. Now coming to the point you are asking, saying that suppose if the CASA vertical started functioning, why it is not getting reflected in the CASA numbers? It is like this, the flow is coming, but the problem is the existing accounts, majority of the balance, what all is there, is majority is moving into the time deposits. Because people are in a hurry, how long these rates will be there and all, they want to lock the rates. So that is the reason money is flowing into from the CASA into the time deposit. Now initially we were also hesitant not to move and to encourage them to retain with CASA. We had a bitter experience of few of the customers straight away the time deposit that moved to some other bank. Initially it may go as a time deposit, but later total relationship may go out. So that is the reason we are encouraging them to be with us only by shifting it to time deposit. So this is a process, it may take some more time, but in the meanwhile you also understand some money may be going for these real estate, gold and stock market. These things also are there in general for the banking industry. That is the reason the new initiative of CASA what we have taken. The new acquisition comes and we deepen. In course of time we will be getting good numbers there in that. Otherwise earlier only branch channel was doing all these things. That may not be sufficient enough to take care of the growth what we are having in the assets.
Right. Understood, sir. And sir, before I move to this loan growth, if you have the number for this treasury gains during the quarter, how much was that? And is this a part of others of 142?
So, the treasury gain is in the presentation, the slide number 11. So 11 crore is for this quarter. No? 11 crore. Okay. Understood.
And now, sir, question on your retail growth strategy, right? So, in the retail loan book that you have given, product-wise, housing, LAP, personal loan, so there is a very sharp or a healthy growth in LAP, and there is a renewed growth in the personal loan, right? So we were doing a separate channel for LAP, I think Neo and Smart, KVB Smart. So if you can update that, A, how big has been the Neo now, and B, how is the other alternate channel of Smart playing out? Number two.
Jay, in fact, there is a small difference in what the Smart and Neo are doing. Neo's focus was earlier on the LAP, but later when we have given them the task of the home loan also, they opened a branch in Hyderabad exclusively for the home loans and CRE. And later one more branch of Bangalore also has been converted for the Neo. And these branches are focusing on the home loans and Neo's focus on the LAP continues. So Neo is growing very well, absolutely there is no issue. So overall, per year our expectation is around 2,200 crores, and this quarter also their growth is around 600-700 crores.
945 crores they have grown.
This 6 months their growth is 945 crores. Whereas coming to Smart, the difference is Smart's focus is not on the LAP. Their focus is on the working capital. So that way they started the centers. In the inaugural address I told that now Madurai center also recently just now the people have been onboarded in the sense that recruitment has been happened. So their outstanding is around currently 49 crores, something like that. So they are settling down with the existing bank practices, what all are there, they are able to settle down and they start giving the numbers. But if you look at originally when the Neo started, Neo's numbers also were like this only. But over a period of time, Neo started contributing around 2,000 to 2,500 crores per year. So over a period of time, Smart also will do that. But both of them are on track. And Smart is also, because what all centers they wanted, they did it. So now maybe next 3-4 months, we will start seeing the numbers.
Right. And sir, what is the outstanding number for Neo? I mean, 2,200 crores is the run rate for disbursement.
4,800 crores.
4,800 crores, yeah.
Sure.
5,000.
And lastly, sir.
5,055.
It's a 5,055. 5,055, yeah.
Okay. And sir, has anything changed on your outlook on personal loan? Because earlier we were, the book was not growing, and now there seems change in the direction. Personal loan.
No, Jay. In fact, I'll tell you, the our outlook on the personal loan continues as it is. There are the two-pronged approach. One is out of our existing accounts, what all we have filters with that pre-approved personal loans. We have identified which has come to around 450 to 500 crores. Out of that, 50 to 60 crores we could book. But we earlier also we have told the Axio partnership, what all is there, where under BNPL so many customers have been created along with our Axio partners. So we thought that depending upon, after looking at their repayment capacity and their CIBIL score of the last 2 years, how we have identified, Axio has identified with their analytics team, a set of people who are good for the personal loans, and we asked them to fund those personal loans initially, and 6 to 9 months they did it and all the repayments were good, and after that we bought a small pool from them. Now we are in the process of working with them for a co-lending arrangement with 80-20. So that way, what all small pool we have taken, but this pool what we have taken is also the customers of ours because they are a part of the BNPL. So we have gone in a different stages. One is the total BNPL. Out of that we made Axio to do that. Once we tested that model and all, third we started going for the co-lending and the pool purchase. So our focus would be two-pronged. One is on the existing book, what all ours are there. Out of that, but let me be frank with you, you cannot expect huge numbers from the existing book because the corporate salary package accounts in our book are relatively few compared to other banks. So if those sort of accounts are not there, if self-employed and all, if you go for personal loans and all, for COVID time, what experience we had, similar experience we may have to encounter. That is the reason we are going slow on our own book personal loan. But whereas that Axio book, what BNPL we have done, there absolutely we have a good scope. We will take it forward. But whatever it is, we will not go aggressively under the personal loans because if we grow there and all, the growth will come aggressively. But the Reserve Bank of India, this what our guidance they are giving, in that way we will go in a measured loans are concerned. But we have a good window opened through the BNPL customers for funding these personal loans.
Right. Understood. And last question, sir, what would be your, target for branch opening this fiscal year?
40 branches we planned. Out of the 25 branches have been opened because we wanted to front load this thing so that once they come, you may be incurring the cost, I agree, but they'll be progressively they'll be delivering something. 25 have been opened. Next another 15 branches also. We will try to do open majority of the branches in this quarter, leaving very few for the last quarter.
Understood. Great, sir. Thank you so much and all the best.
Thank you. Thanks, Jake. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. Participants who wish to ask questions may press star and 1. The next question is from the line of Prabal Gandhi from Ambit Capital. Please go ahead.
Thank you. Am I audible?
Prabal, audible. Please go ahead.
Thank you. And congratulations, Mr. Babu.
Thank you.
For the good quarter. So just continuing from the last part of the presentation, you highlighted that bank does not want to compromise on margins, and that is why bank is conservative on guidance of growth. But we also have 250% plus LCR, liquidity coverage ratio. So can you not utilize this LCR and fund loan growth?
Yeah, we can do it. You have to look at it two ways. One is LCR is there. Second side is the CD ratio. So all along we have been maintaining a CD ratio of 85. Currently also if you look at it, just 84 plus we are there. So that way we have some room. If you look at few banks are there, 90, 100, 110 also is there. But we do not want to go with that. Majority of our funding credit, we want to do it through our capital or the deposit. So that way, what you said is correct. That room is available there. We can take it out. We can do that. That also we are working on that. So second side, because we have 2,200 crores more than the SLR required, what all that cushion is there. So we have kept it other side. But to the extent possible, we want to raise the deposits here and then to fund the assets. Otherwise, what you said is correct. That also the room is available for us.
Okay. And in the deposit as well, we are focusing more on the CASA franchise and the term.
Correct. As we said, because last year itself we started the process, but it took some time to augment these people, and now our team has come in place. As I was telling that initial hiccups, what all are there, maybe in the process, product, technology, these things, the process is going on. Once they are through, so they will be on the job and all, they will be firing the gun, and then those customers deepening the branches will be doing. So this is the plan.
Okay. And sir, so since we are focusing on CASA franchise and now since we have also built the team for CASA with CASA people, should we not increase our CASA rate because our savings rate is 2.25%? This is one of the lowest. So instead of getting term deposit at 7% and above, we can simply raise our CASA rate to maybe 4% or 5%, and we can get CASA deposits as well.
I agree, Prabal. That's a good point what you have mentioned. But what you do, empirically, when we saw it earlier, the interest rate change has not brought much money. Let us assume in our case also above 100 crores, we said that we'll give a higher percent of 4%. We didn't find any terrific growth into that particular 100 crore segment at all. So next thing also you need to look at it. Suppose if we are going to change the rate and if we are going to revise, the uncertainty that I may or may not get fresh accruals, that is uncertain. But certainty is existing portfolio gets repriced immediately and I'll have to pay on this at this rate to all of them. And tomorrow for any reason, if I reduce this rate, there will be a big heartburn. So that is the reason what we thought. This has been discussed many times in our ALCO meetings and with the liabilities team also. So what we thought, instead of spoiling the existing setup for the customers and paying higher, so why can't we try? And we had a discussion with the field team also whom we have taken, whether we need to do. What they also said is, let us test the waters currently with the current rate, and if we reach a Chinese wall where we cannot go beyond that, at that stage we can do it, rather than overnight increasing the cost for the CASA now itself.
Perfect. The second question is just to clarify, so you said in your opening remarks that we are expecting 20 basis point jump in cost of deposits for next 2 quarters and 10 basis point jump.
2 quarters. I told about third quarter.
Okay, only third quarter and an increase of 10 basis point in yield on advances.
No, that also what I mentioned was is like this. 20 basis point spike in the cost of deposits and 10 to 15 basis point spike in the yield on advances in the coming 2 quarters. Because if you look at the second quarter also, the yield is up by 7 basis points. So that's why what we thought is, if the same trend continues for the next 2 quarters, the yield may go up by another 15 basis points. That's what we thought.
Okay, but by the end of third quarter, at least the deposits will get fully repriced. So the maximum that deposits can get repriced is by 20 basis points.
That is what our intention, because it's quite opaque now. How it works, we do not know. If the credit growth grows, every other bank also raises the deposit. You may have to raise. Otherwise, if it is not required, you may continue the same way, or RBI may do something. With all these things, let us see once this quarter and all, then we'll take a call for the next quarter.
Prabhat, see, repricing on the aspect and new accounts onboarding, whatever we are onboarding, we have to pay higher cost. So that is the issue now.
Yes, understood. So the third question is on growth. So in the commercial, in the small and medium segment, the competition is relatively on the higher side, but we are still able to clock a rate of 19% growth. So what is our strategy here and how are we able to do much better than what our competitors are doing?
Yeah, in fact, the team there, they did a homework of what are the changes required in the process and the knowledge gap in the people who are unable to deliver. With all these things, and those who are well performing, how did they do it? All these things they have studied, and the same thing is getting replicated to see more and more branches contribute. That is the reason. So if you can look at it, the disbursements quarter on quarter are going up by 10 to 15%. So likewise, which are the sectors where we are strong? If we focus on those sectors, this clinching the deal will be much faster. And that is the reason the food processing, wholesale, retail trade, and these sort of things have been given focus rather than the textile. At a point of time, we were doing on the textile. Now textile is slowdown is there. So the team started focusing on rest of the thing. There's a buoyancy in the market in the ground. So this requirement of the credit is there. So we are able to do. So that way, if you look at it earlier, a few divisions were contributing. Now many divisions started contributing, and any sort of a hitches here and there in the whole process of onboarding, that we started fixing. So that way it has smoothened the process, and the team who are operating, they become more comfortable in pushing the SME.
Understood. And then how are you seeing your loan mix evolve over a period of time? Because now our corporate loan book share is already at 21%. It used to be around 40% earlier.
Correct.
How are you seeing the progression of
you would have seen that. So if the commercial book grows, nothing like that for us. The reason is it's a granular book, highest yielding, and where we have strength, and that way our aim is to maintain the 33, 35, what all is there progressively to take it, and the rest of the two verticals of the agriculture as well as the personal banking, 22 to those sort of things, and the balancing number will be the corporate. And corporate also, you would have seen that our focus has moved from a big corporates like 200, 300 crores. It has come down to below 100 crores, and majority of the exposures are below 75. There is a reason our average ticket size also has come down to 39.41 crores. So corporate also, though it is a nomenclature talks about corporate, we started granularizing the portfolio for better yield and for the risk management. So our focus would be on the commercial, followed by the retail, agriculture, and then CIG. Agriculture is really helping us in maintaining the priority sector. Otherwise, for this growth, what we are getting in the priority sector is not growing. We need to buy the PSLC certificate, which again is a cost for us.
Understood. And the last question, so what would be our technical write-off pool, and what kind of recoveries are you expecting from this pool over the next 2 to 3 years?
No, in fact, we have indicated saying that it can be around, last call, one of the analysts were asking whether we will be able to more or less reach the number of last year like 208 crores. So we are more or less on track for the 250 crores, something like that. We will be able to do that. 250 crores we will plan for this one, and for the whole year we will see how we can take it forward.
Understood. And do you have the number ready for technical write-off pool?
Ready? What is that?
Technical write-off pool number is.
And a pool is, I'll tell you, probably it is deceptive. The reason is, suppose pool, if I talk about, let us say it's 400, I'm just saying that. There are many accounts of the old infrastructure which were booked in 2012 and all. So where actually when they have gone to this NCLT, what you get is 3%, 4%, and many of the consortium accounts are there. Those accounts where the chances of recovery is pretty low. But whereas if you look at what is actually retail, MSME and the corporate with some sort of a security, which comes to around 1,500, 1,600 crores will be there. So our focus is majority on them. But as you know very well, so every time we try to do it and all, the borrowers are much more smarter. They will use all legal means to stall the process. And we are also tuned for this now and all, how to overcome this. That's why we started getting this money which was not there earlier. So our team is now geared up to push the technical write-off amounts also to the extent possible. So that way we can expect around 1,500 to 1,600 crores is a pool where you can put your hands on that.
Sure. So this is very helpful, and congratulations once again.
Thank you, Prabal. Thank you very much.
Thank you. The next question is from the line of Madhu Dey from AlphaStreet Capital Partners. Please go ahead.
Yeah, hi. Congratulations on continued strong performance.
Thank you, madam. Thank you.
So I have this question on your unsecured book, which is very small. So I wanted to understand your strategy on this piece, because while it is extremely important to focus on the liability which you are doing, but this is something which is, although you have a large higher yielding MSME portfolio, but this is also one segment which a lot of competitors are going very aggressive on. So given that you still have a very low risk-weighted asset density, what is going to be your strategy on the unsecured piece?
Yeah. Ma'am, in fact, if you can look at it earlier, when they were asking, I was narrating. Actually, earlier, the personal loan was not a focus area at all for the bank because our focus was majority on the secured. So even if you look at it, majority of our personal segment as well as SME segment, they are backed by security. Now that outlook we have changed over a period of time pre-COVID. Maybe it was the wrong time, I do not know. So we have actually analyzed our total portfolio. We brought out from our own existing customers who are eligible for the pre-approved personal loans, and we have gone for around 500 to 600 crores of portfolio. So we were growing at that time. Suddenly COVID has come, and the first default started in the personal loans because there is no security, no stake, no skin in the game. So they defaulted on that, and we had to bear the brunt at that particular point of time. And subsequently we were lying low. Then later we thought when everyone is growing, so the point what we thought was this is a cycle when things move well, personal segments, personal loans will go well. If there is a small issue here and there and all, again you will be having this sort of thing. We have come out of the bigger issues of the corporate earlier. We do not want to actually repeat those sort of issues again in the retail. That was the precise reason we were a bit conservative. But then we found out different opportunities in that. As I was mentioning, our existing customer base, if you look at it, majority of them are not salaried. Now that the liability teams, what we have created, we have a subsector and a team will be doing for the salaried also. Over a period of time, we also will be along with others for this personal loan. But in the meanwhile, what we thought is, you must be knowing we have an arrangement with Amazon through our partner Axio, and we have created a big pool, and more or less the outstanding ranges between 350 to 400 crores. But this is not the question of outstanding. The number of customers whom we have created out of that. It ran into 30-35 lakhs customers are there. Out of them, many of them out of their past record and performance, they have proved with their CIBIL score also, they are good for the personal loans. So what we did is our Axio team has a very good analytics team is there. So we worked with them and found out and filtered who are the people who are good for the personal loans. And for that, what we did is we asked Axio to finance these people initially, and Axio started financing them from the last year, January. And up to 1 year, more or less, they have financed, and the recovery was going on very well as planned by them. That is the reason this year we bought a small pool out of that because these are the combined customers of both of us, and now we are actively engaging with the Axio for the co-lending because these are tested customers where the chances of failures are, I'm not saying failures will be there, but the loss given default, if you look at it, that is bearable from the yields what we are getting. So our focus is on two-pronged on these customers. One is you fix a personal loan limit against them. We are activating our credit card team also by taking people from the market. So we have the bin, other things are there. So once that team is in place, these customers, many of them have no credit card. The personal loan limit, what we are giving, a part of that we can give them as a credit card, let us say 5,000 rupees, so that it will help them to create their credit history. And for us, the credit card business also will go up where MDR we will be able to get. And on the other side, personal loan also we can give. So this is a broader plan what we have, and we are actively working on that.
So what's is it that only personal loan is the only unsecured piece in your entire book, or is there anything?
Absolutely. Personal loan is unsecured. Otherwise, the rest of the data if you have seen, so home loans, mortgages, jewel loan, vehicle loans, all of them, they are more or less secured by something or other. Education loan is also to some extent backed by some sort of a collateral. And other loans, what we talk, it includes the staff loans, what we have, as well as the loans against the time deposits. So personal loan in our connotation is they are literally unsecured loans.
Okay. So any target for the unsecured loan in the next 2 years, and any new product that you are planning to add here?
No, all along what I have explained to you, this is what is in the plan. But I will tell you, we will not go aggressively in the particular segment. It can be maybe a 5%, 10% of our portfolio that way, and cannot be beyond that.
Got it. And any new products that you are thinking about?
Yeah, product is a blended product, what I said. Suppose if you give a personal loan to them, a part will be financed this way, and second one if you give a credit card limit to them. So then it's a blended product going to them, credit card limit, and on that you have a dual benefit. So on the interest portion MDR, what we are getting that way, so that will be helping us. Second, the interest will come. So now once we start doing this one, we will be finding many more opportunities from these customers. Our Axio, who is very well entrenched into these sort of things, we are working on them. So we will bring out some more products for these people once we start testing with the personal loans.
You're not, a lot of your competitors are, eyeing this microfinance segment also.
Yeah, that also I tell you. In fact, in one of the calls last time we have mentioned it, that also I need to brief you. Now what happens, there's a lot of opportunities there because there also is absolutely unsecured bank was not going. Last 1 year we did a homework on that. Rather than we directly embarking onto the journey and do this one, because when you do not have an internal expertise, later you may burn your fingers. What we did is we partnered with one of the BC who is already doing with 12 other banks and all for the last 7-8 years, and they have majority presence in the south, and we have partnered with them by looking at their track record and all. So now they started opening the branches of ours as well as theirs together, and we have common underwriting norms are there. With that, the portfolio is more or less reaching around 100 crore last 3-4 months when we started, and we are in the process of entering into a tie-up with 2 more such partners, and once these 2 places also will come into place, so progressively we will be going under the MFI space also.
So this is coming under which heads in your...
Under agriculture it will come there.
Okay. So there is a small piece of unsecured in agriculture also.
Yeah, absolutely. My point is we started taking the baby steps because we are looking at what are the various pros and cons, and once we have comfort and all the firm footing what we have, we will scale it to the next level.
Okay. And my very last question is, you indicated that you wish to maintain this 1.5% ROA that you have already achieved.
Okay.
It means that there's going to be some kind of stagnancy in ROA before the deposit engine starts firing. Am I correct in this understanding?
So it's not the question of stagnancy. If you look at it, we have many pockets are there. If you look at our NPA, the total NPA of the net NPA of the bank is 324 crores. Out of that, if you can just look at the same slide, 155 crores is the slippages of this quarter. If you deduct that 155 crores of this quarter slippages, the net NPA comes to 169 crores. Out of that, if you look at it, restructured book 25%, we have a provision there. Out of 900 crores, 25% is there, 200 is there. If I appropriate the 200 crores restructuring book, my net NPA will become 0. Over a period of time, then my need for providing for the credit cost comes down, and automatically my book grows the top line, both on the income side as well as the credit cost comes down. In between, the cost we are incurring for these new projects may be there, but they are going to yield result over a period of time. So we need not worry about the ROA, because if you can look at it, when the things are good, 25 crores we have provided for the contingency reserve last quarter and this quarter. Maybe after 2 to 3 quarters, there may not be any need to provide that one once we get a clarity that what all we have provided would be sufficient enough to take care of the ECL. So all these cushions what we have not yet exhausted. So that way, if you look at it, we are more or less getting a feeling saying that exit quarter, we will be more or less at about 1.6 as far as the ROA is concerned. So this trajectory what we have, and you would have also seen our SMA 30 plus, which has to forward flow into the NPA. There also, when it is under control, the chances of NPA and in turn the credit cost, all these things, that's why we wanted to show transparently to the market. So there we have enough cushion in the credit cost, because on a 324 crore, after 2 months or 2 quarters, there may not be much need to provide 102 crores what we have provided here. If you have to provide 25 to 30 crores there itself you will have an additional cushion of 75 crores there.
Okay. You see upside in the credit cost in the near term, in the next 2 quarters.
No, we are not looking at it. That's what I'm saying. Credit cost, what we have given an indication is 75 basis points. We will be well within that. Credit cost will not go up there. That's what I'm telling. The reason is, when your SMA 30 plus is 0.68%, something like that, then even if you assume 50% goes towards NPA also, it may not be 0.34. So that way there may not be much need for the credit cost there. So you will have some sort of a freedom from the credit cost, which will help you in your ROA.
Okay.
Am I clear or not? If you are not clear, I can repeat.
I understood it. What you're trying to suggest is there could be some pleasant surprise in terms of your need to provide in the coming quarters, right?
No, there is no question of any pleasant surprise. If you look at it, numbers are very clear. When my net NPA is 324 crores, how much I will provide? I cannot provide 400 crores for that.
Right.
Okay. As simple as that.
And a very last question, since because of the need to improve the quality of deposits, you're having to beef up your field force, etc. What is a realistic timeline to get to that aspirational cost to income ratio?
Aspirational cost to income ratio, you would have seen that we were at 54, 55. Okay. Ideally, had we not taken the initiatives like liabilities, 1,300 people taking, in the branch level, 1,000 lower level team we are taking, SMB smart, KVB smart for the commercial banking what we are taking. And all these things if we have not done, ideally our cost to income would have been at 45 only, no problem. But we will be doing injustice to the bank if we do not take these initiatives. The future of the bank will be very gloomy. That is the reason, as an investment we are making, which should not be considered as a cost at this stage. If you do not incur this cost at this stage, tomorrow your top line and income will not grow. Otherwise, our intention is to be in the range of 45 to 50 only. So you could see that around March ending also, how was our cost to income ratio.
Thank you very much, sir, and all the best for your future.
Thank you. Thanks.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. Ladies and gentlemen, to ask questions, please press star and 1. The next question is from the line of Lalit Deo from Equirus Securities. Please go ahead.
Yeah, good evening, sir. Congratulations on a good setup.
Good evening.
Congratulations. Yeah, so just one question or a clarification maybe. So like you mentioned that on the employee side, the expenses will be broadly in the range of about 290 to 300 crores after adjusting for the superannuation benefits. So like from FY25 onwards, like we can see an annual employee expenses in the range of about 1200 to 1250 crores. Is that right?
Yeah, we estimate that way only. I'll tell you, Lilith, what we are doing, because IBA, what all has come up and all. So last time when we did it and all, there was a shortfall in one quarter we had to make. So we do not want those sort of surprises and shocks to any one of them. That is the reason sufficiently we are making provisions for these sort of cushioning. So tomorrow if this much of requirement is not there, we will be reversing these things. So agreed, what all we can perceive and visualize, what is required, everything we are providing. Because when good times are there, if you do not provide at this stage, tomorrow you may have to repent. Once these things are through, and as we said that one time 100 crore for 3 quarters if you provide, this will be out. From then onwards it will be a normalized cost and all. What you said is pretty correct. We may be in that range only. Hi, Mr. Lalit, are you there? I think he's disconnected.
The line for Mr. Lalit seems to have dropped off. We'll have to take that as the last question. I would now like to hand the conference back to Mr. B. Ramesh Babu, MD and CEO, for closing comments.
Yeah. Thank you all for the patience and the interest what you have shown in our bank, and for the good words and the good wishes what you have conveyed. And we'll continue our journey the same way, and we will take it forward, keeping the interest of all the stakeholders. Good day to all of you, and thank you once again.
Thank you very much. On behalf of the Karur Vysya Bank, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.